What is a short position in trading? Well, the short answer is, you know that button that you click on to buy a stock? There's a button right next to it that says sell. You can click this button when your stock stops doing this and starts doing this. If you didn't know stocks could go down, surprise. That's right, you can make money on the way up as well as the way down. So a more expanded answer will be provided after you like the video, subscribe, and subscribe from a Patreon if you want to as well. Shout out to the best 2 patrons a guy like me could ever ask for, Koro and Honor. Just noting really quickly, this is just a general overview. If I was to get into every little nitty-gritty thing, this would be a lot longer video. So at its most basic level, a short position is where you borrow a security and sell it on the open market. So because you're borrowing this, you have to return this eventually. So you do this by buying it again and then giving it back to the person who you borrowed it from. Now, if you did this correctly, you would have sold this at a high price and then bought it back at a lower price. That difference in price is your profit. Like everything in the stock market, this doesn't come without its risks. First one being, you have a ceiling for your profits, but also unlimited loss exposure because it can theoretically go up forever. Second, you need a margin account for this, and that usually requires more than $2,000 in an account. The third thing I don't see a lot of people mention is that you also pay an interest rate overnight for every day that you have this short on. The fourth thing is that I don't see a lot of people mention this all the time until pretty much it's too late, but if the stock has a dividend on it, you're going to end up paying the dividend if you're short. So if you're asking, why would I short anything? It seems a little risky, and I'll tell you. You're essentially offered another dimension on how to play the stock market. If you feel like something's not right or if it's just too overvalued, you can short it. And the second thing is, when a stock drops, it drops very fast, like pretty much faster than how it went up. So are shorts a good thing or a bad thing? And to answer that, shorts are essentially a part of the market. They help weed out fraud, they stop runaway prices and provide a more fair price discovery. They also add liquidity because you need someone to sell to and someone to buy from. They've had a pretty bad rap in more recent news cycles because of the whole GME debacle and so forth, but they also play an incredibly important role in the market, and it should be viewed as simply just another tool in your toolbox. But what do you guys think? Should we remove short selling? Leave me a comment down below. Don't forget to subscribe. And just remember, just because you're a day trader doesn't mean you have to trade every single day.